Hey guys, and welcome back. I know it's been a minute. I've been kind of like, just busy raising a kid and all that. But you know, I'm here. I gotta now I have a camera, so you guys can see my face. Sorry, I look a little tired. I've been also under the weather. But beside all that, we're gonna get into today um, one of my favorite setups that I got into. And well, actually, full disclaimer, I didn't use real money. I used paper money because I'm testing out this new strategy that I've been trying, and I've talked about it, previously, but I just want to go into detail about it today, and I think you guys are really going to enjoy this one. All right. So without further ado, let's get into it. All right. So here on the chart we have Tesla. All right. So I don't know how many of you actually follow me on social media, but I've been posting Tesla about to go crazy for a while now. All right, and I'm going to show you the reasoning and the whole idea behind why I believe this was going to happen. So first, we have the daily chart, but I'm actually going to start on the higher time frames. I like the higher time frames because the higher time frames give us such a great glimpse of, in a sense, what's to come. All right, so we start off with the higher ones and then we kind of work our way down. So the one that caught my eye the most, so I'm not going to go through all of them, but the one that caught my eye the most was the 17 day. As you can see here, we had two inside bar candles. And again, for those of you who are new, inside bar means that it did not break the high nor the low of the previous candle. So this candle here stayed within the range of this candle here, and this candle here stayed within the range of this candle. The high is up here, the low is down here. This is the next candle. It did not break the high nor the low. All right, so we did have a series of other candles after this that broke up. So we had a two up and then another continuation where I think today, yeah, it finally broke another two up. But this is not done. Like I always say, each candle tells a story. All right, it's like think of it as a book. All right, in each book, each candle represents a chapter. All right, so the chapter is telling you a story. When you zoom out and you look at the entire chart, what it does is it gives you the end of the story of where this story is either going to go, or obviously, like I just said, where it's going to end. All right. So we have these four candles here and they look similar in style. And for those of you who don't know, these are what we call hammer candles. Now the story behind these candles is simple. This candle opened, so this one is technically a red candle, so it opened up here, and then sorry, it opened here, and it pushed up a bit, and then they brought it all the way back down. But every time they brought it down to this level, to around this level, it kept being brought back up. All right, same thing happened here. This candle opened up down here. It either pushed up or pushed down. I'd have to actually look to see. But regardless, the wicks of the candle are telling me that buyers are stepping in and they're buying it up. Every time it gets down to this level, they buy it back up. Same thing happened here. Went down, they bought it back up. Sorry, let me move this so you can see it better. Alright, so went down, they bought it back up. Same thing here. We are creating these long wicks that are telling us a story of where buyers want to take Tesla. Alright, now it is not too late to, get something out of this because I'm pretty not 100%, but I have a strong bias that this is going to be leading us to the upside. All right, so that was my first clue. Looking at every time frame, I came upon the 17 day, and that's what gave me my initial like aha moment to see like, oh my god, Tesla could really be about to do something. All right, now we go to the daily. So on the daily, I had to zoom out. All right, so when I zoomed out, I noticed something in the market structure. Now, I've gone over these principles and concepts before, but in case you don't remember, I'll just give a quick review. So, we have our higher high, which made a higher low, and then we made a lower high. Now, for those of you who have studied the videos and maybe understand, realize when this happened, it starts to signal that a trend change is upon us. Before, we were in an uptrend. Uptrends are trends that make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and if this had continued and taken out this high, we'd still be in uptrend, but it failed to do so. So now we have what's called a trend change, and so we made a lower high. And as you can see, we continued to make lower highs and came all the way down here to this low. All right, now here's where it gets beautiful. So we made the low, and then we made a lower high. So we could, again, have continued the trend downward. So we did make our lower low, but notice at the bottom of this lower low, it did not, what's the word is called, displace, meaning aggressive movement to the next level. All right, so as you see, when we were up here and we made the lower high, we displaced through this higher low. We aggressively moved, even so you see we have gaps through that level, confirming that we are now in a downtrend. When we got here, we grabbed the liquidity here, but we didn't displace through. Price held this level, and then we had another candle, did the same thing, and then finally we get a break above, you know, back to the upside. Now we did have a bit of consolidation on a daily, but eventually, again, this put in now another higher low, and this did not take out this low nor this low. And so from here, you can start to see the beginnings of a trend change. We get this candle, then we get a gap up, and then finally we get our displacement to the upside where price took out this previous lower high. So now the trend has changed once again. All right, so now we're making our way back up, making our higher highs and higher lows, higher high, and then we get another displacement candle to the downside. We did take out this low here, but we had not taken out this low, right? So technically, still a higher low. All right, I'm not going to get into the specifics of that, but there's one thing that I just wanted to clarify. So we had that market structure. Now, here's where it gets juicy. We are making our high, made our higher low, but we failed to make a higher high. Okay, so now what? So we need to remember market structure. We need to see if we're going to change our trend. So we made a high, a higher low, a lower high, and then we made another higher low. That seems to be very interesting. And then a lower high, but yet another higher low. And then we'll get to this part next. So when you see that, what that is called is compressing. All right, or as one of my mentors used to call it from Ghostbusters, the proton pack, because you know it makes the little squiggly you know, like lines or whatever, like the protons pack it does in Ghostbusters. All right, so with that being said, we are compressing, so we are tightening. It's like a coil. Tesla has been coiling for quite some time, and usually when you get movements like this, it tells you something. It tells you that they're gearing up for another big move. Now, it could either be to the upside or it could be to the downside. But the fact of the matter is, usually the way that price enters is usually the same way it's going to exit. All right. So since we had this displacement into this coil, so it went from the bottom to the up, we can surmise, again, nothing is 100%, but this is just high, you know, probability that price started coiling, and because it entered from this direction and continued to coil, we can believe that it's going to exit that same direction, which is to the upside, and continue to break out. All right, now here's where it gets even better. So we are making our lower highs, higher lows, lower highs, higher lows, lower highs, higher low. We got to this point here, obviously, where the compression finally broke out and it made a higher high. Now, that was my next signal to really pay attention to what it does next. Once it took out this high, it retraced and still created its higher low. Now, with the higher low being made, what that ended up doing was, first of all, it tests this trend line, and then it bounced off of it and is continuing now to push higher. Another thing that I was able to institute was something called OTE, which is a fib, you know, a Fibonacci tool that you can use to measure what's called the optimal trade entry. Okay, so I'm gonna bring that back up and I'm gonna show you exactly how it works. All right, so I'll just use this one. So you take it from the previous higher low, because this is the range, and we attach it to the last higher high. All right, sorry, that didn't work. And I place it here, and now I'm going to do is I'm going to use I use it for my major OTE. Where is it? Oh, right there. All right. And so now this is going to tell me a excellent area where price tends to to bounce and then continue possibly to go higher. Again, the signal for this use though is the higher high that took place here. Okay, so normally in the compression it might be a little difficult to use this tool, but because we broke out of it and we now have a structure shift in a sense, we were able to use this tool from here and see right here. There's this candle. This is where I entered Wednesday, August 20th for 330 calls for 529. All right. I mean, not 529, sorry, 829. I'm bugging. All right. Excuse me. So I was able to use that tool to help me determine if this was going to be the optimal trade entry. Now, the reason why I decided to do a paper trade is because I know I sometimes don't normally use this tool, and honestly, I've had troubles with it, but it wasn't until my mentor, Abisai, recently uploaded a video that really helped clarify how and when we're supposed to use this. So I used it from the range here to this range, and I saw it worked completely. So it bounced right off of this level here, and then from there I was in. And again, paper trade, but I was able to net 200% so far all the way up because of the area that is the optimal trade entry. All right, so this isn't finished by any means, by the way. Again, we have our compression, and now we're going to have most likely our expansion to the upside. All right, so again, I just wanted to go over that. That was what I saw. There were some other things that definitely contributed to my analysis as to why Tesla was going to go up. For example, another one was the 4-week. All right, again, we're still double inside. No, we were double inside 4-week. Finally had a break to the upside. Just gonna close this. So these two candles here are inside bars, and then this one is our 2 up. All right, we have gotten a slight rejection back down, but it's not even rejection. It's just probably some liquidity being grabbed from this point here and coming down. So we'll see how this continues to shape up. But again, my bias is to the upside and for much more. We do have a gap here, so possibly this could be our price target for Tesla in the upcoming weeks. All right, so I hope this video was helpful, and I hope I did a pretty good job of explaining what I saw and how I was able to somewhat anticipate the move that Tesla was about to make. All right, let me know if you guys have any questions. You know what to do. All right, later.